You're listening to Sound Money from Casey Research.
Hello and welcome to the show with me, Andy Duncan, in London. Today my special guest is the legendary Marc Faber, publisher of the Gloom Boom and Doom Report, coming to us today from Thailand. On today's show we'll be discussing the Ukraine, China, stock market bubbles and gold. Hello Marc.
Yeah, hi. Thank you for having me on your program.
Our pleasure. We currently have a very volatile situation in Russia and the Ukraine. With Europe very reliant upon Russian energy supplies, what do you think this situation is going to do to affect world markets now and in the longer term?
Well, I think the problem is that there are no real solutions. Russia, from its perspective and point of view, did the right thing. There was support by Western powers, especially by the U.S., to overthrow a democratically elected president in Ukraine. The Russians did not have a great admiration for him, and it was not their favorite choice for presidency, but with radical elements coming into the government, they were concerned that it may have some implications on the naval bases in Crimea. And that is, for them, of great importance. And I don't see how there will be an immediate solution to the tensions there. Moreover, I believe that having essentially seized Crimea, or having been seized by Russia, the Chinese will now also think, okay, we'll do the same one day in Asia. Because as you know, there are territorial disputes between, on the one hand, China, on the other hand, Japan, the Philippines, Vietnam, and China.
And do you think we'll get through all of these situations unscathed without going to anything very serious?
Well, in the case of Ukraine, I don't think that there will be military interventions because the U.S. Is not in a position to intervene there, nor does it desire to intervene there in a meaningful way. The U.S. is a country that likes to create trouble, but they don't like to clean up things.
Getting back to China, we've just seen some corporate bond defaults there. And in the last few years, there's been $24 trillion of newly created credit, which might be starting to burst in on a bubble. If we do get through the Ukraine crisis okay, do you think Russia could actually become the new China with all of its natural resource wealth?
Well, let's put it this way. China has its own problem. They have a gigantic credit bubble. How it will be deflated is debatable. It could end up in a very ugly way. But if you look at the price of copper, that has collapsed by nearly 10% in 3 days, something is truly wrong in China.
And we've seen the same sort of thing with iron as well, haven't we? Moving back to the Western world, despite good news from the mainstream media, a financial crisis never really seems to be that far away, even though the central banks imply that they've got everything under control. How much longer do you think this kind of situation can keep going in the West before it implodes? Or do you think it could last indefinitely? Or could we even go into a real recovery at some point?
One thing is for sure. If you print money, it creates an artificial recovery and it will not go indefinitely. I repeat, it's out of the question that it will go indefinitely. What has to happen if they want to continue to boost economic activity and prevent the economy from falling back into recession, they have to print money at an increasing rate. And then there are other problems associated with this increasing rate of money printing, such as the cost of living going up more than the real wages, and the standards of people going down, and eventually you get into social problems.
Do you think then that we're going to head in towards a Misesian crack-up boom?
Well, I would say that from the lows in 2009 in the financial markets in March 2009, we're now 5 years into the bull market, and the U.S. economy bottomed out in June 2009. We already had a crack-up boom, not in the economy of the typical household, but in the economy of the super well-to-do people whose asset prices rose dramatically and as a result created a huge wealth inequality.
Now, if you follow the Austrian School further, people like Murray Rothbard will give us the opinion that once the state starts buying its own debt, the game is up. But the markets have accepted this eternal money printing since 1971 and particularly since 2007. There's been tens of trillions of new currency units being printed, but we still haven't gone into a crisis. Do you think that the Austrian School has to change its thinking, or are we very close to entering a problem?
I don't think the Austrian School needs to change its thinking. But if you print money, you can prolong the crack-up boom for years. It may crack, in other words, the bubble may burst tomorrow and maybe only in 5 years, who knows? But when the burst comes, it will be a disaster.
Okay. Do you think there's any kind of maximum time for that? I know it's hard to predict times, but do you think there's a maximum period, say 10 years is an absolute outside maximum time?
Well, as I mentioned to you, in order to keep the crack-up boom going, they have to print money at an accelerating rate. And so my view would be that we have already printed so much money, and to accelerate it will be bringing about numerous other problems. And so my time frame is that the whole thing maximum will burst in 3 years' time.
Okay. Now, we're starting to see these corporate bond defaults in China, and we're seeing high margin debt levels in Western brokerages. We're seeing long-term interest rates going up, and James Turk and people would say that long-term gold interest rates are going up. Now, the Chinese and the Russians over the Ukraine, they could pull the plug on the dollar at any time by selling off all their US treasuries. Do you think there's some kind of collusion going on between all of these world central planners just to keep the dollar going, hopefully beyond this 3 years that you're talking about?
Well, I don't think that Russia really has an interest to destroy the dollar, because relative to their own currency, it's a strong currency, and they have lots of reserves in dollars. But I think we've seen the cracks already happening in the sense that an increasing quantity of trade between China and its trading partners is no longer occurring in dollars, but in yuan or RMBs, in other words, in the Chinese currency. So increasingly, I think the position of the US dollar and the great privilege that the US has enjoyed from having a reserve currency gradually is eroding.
Yeah, I think the British had the same problem with the pound, didn't they, in the 20s and 30s. Now, let's move on to the future then. Let's assume that we've had the crack-up boom has finally exploded and something's happened. What do you think the new monetary world will look like? Will we go back to the old monies of gold and silver, or could we even go back to some kind of cryptocurrency like Bitcoin?
I doubt we'll go to the Bitcoin type of currencies, because as it has been revealed, it's very vulnerable to all kinds of fraud. I think we'll probably go back to some kind of a gold and silver standard. And for sure, once the collapse happens, the power of central banks will be curtailed greatly, because people will realize who brought along first the Nasdaq bubble in 1999, the Federal Reserve. Who brought about the housing bubble between 2001 and 2007, the Federal Reserve. And who is bringing now along another great credit bubble and asset bubble, the Federal Reserve. And so, in my view, when the collapse happens, people will say, well, we have to contain the power of central bankers. And that's why we need to tie money to some kind of an anchor, such as gold and silver.
Do you think that we'll be able to break the monopoly of governments on something like a gold standard and possibly move to a world of private currencies, as postulated by Guido Hulsmann in his books on private gold money?
Well, it has been suggested by numerous economists that the best would be to have a system where each bank issues its own money. And so solid banks would have a strong money and weak banks weak money. I'm not sure this is practical, but I believe that there has never been a pure gold and silver standard. There was always paper money on the side. But the gold and silver standard limited to some extent, not entirely, but to some extent, the quantity of money that could be printed.
Okay, and just a final kind of investing question. Do you think then our listeners would be best providing for themselves by investing in gold and silver now to protect themselves from the collapse when it happens, possibly in 3 years or possibly a bit longer?
Well, let's put it this way. In my view, all assets have been grossly inflated over the last 30 years. Okay, real estate has gone down in the last few years, but it's still significantly higher than, say, 1980. Stocks are in the sky. Art prices are in the sky. Commodity prices, admittedly, they were very depressed in 1999, but they also have gone up substantially over the last 10 to 12 years. So everything is now at the high level of valuation. In other words, we can have inflationary symptoms either in consumer prices or in wages or in asset prices, and asset prices are very high. I don't think that anything is very cheap, but if I had to compare different asset prices, say real estate, stocks, bonds, commodities, gold, art, and so forth, and old cars, then I think that gold and silver is relatively inexpensive because they had big corrections already. And you should not forget that the global bond market now is over $100 trillion. We are in a colossal credit bubble globally. And the debts will simply not be paid one day. More important to me is, if you own gold and silver, how do you protect yourself from the government not taking it away from you? That is the more important question. I wouldn't keep gold and silver in the US. I would put it somewhere else.
Well, there's some really good vaults and things in Singapore. Now, just a final thing. You're a well-travelled man, and one of our listeners wanted me to ask you this. What's the best city in the world to have fun in?
trans, you like boys, you like girls, you like old women, young women, anything is possible.
Let's just stick to
Everybody
beer,
has
shall
a
we?
different taste. Some people like Latin American ladies, some people like Caribbean ladies, some people like Russian, Eastern European, Ukraine ladies, and some people like myself, I like Asians. So I live in Asia, and in Asia, I think for nightlife, the best cities are, say, number 1, Bangkok, 2, Jakarta in Indonesia, and 3, probably Hong Kong or Singapore.
Okay, well, I've just been in Singapore, and I can agree that that's a great place to spend some time. Well, it's been fabulous speaking to you today, Mark. Where's the best place our listeners can discover more of your views about economics and monetary things?
Well, we have a website, gloomboomdoom.com, all in one word.
Fantastic. So, thank you very much for your time today, Marc Faber.
Bye-bye, thank you.
You can subscribe to Sound Money on iTunes or sign up to our subscription services at soundmoneyshow.com, where you can also listen to our growing catalogue of podcasts, which include interviews with some of the most famous speakers on money in the world. These include Jim Rogers, Doug Casey, Rick Rule, and now Marc Faber. A special thank you today for Mark for joining us on the show, and thank you very much for listening. Until next time, goodbye.